Good morning, everyone. This is Rose. Today is May 6th, Monday, 1 minute after 9 a.m. Eastern Time. Okay, so let's begin. Just doing a quick audio and video check just to make sure that everybody can see my charts and hear me. Great, thank you. Thank you, Roger. Okay, all right, let's begin. Just want to go through the higher time frames first, starting with the monthly chart. All right, so the April closed on its low or lower half with a really strong bull bar, but the prominent tail, lower tail, is a rejection from this trend line acting as support, which I have been saying that we really need to pay attention to this trend line. Market is going to keep coming back to it, whether it's in an angle or not. So I kept it on my higher time frame because it was a resistance, broke support. So when we get back in here, we will bounce, and that's exactly what we did. We do have an IOI at the moment. So this is basically the monthly chart. The May is at the moment is an inside bar, but it's just too early to say how the bar is going to close because we are just in the first week, the second week of May. So but it is an inside bar at the moment, and we have a bull channel here, but it's also the second leg up. So market is looking for possibly go back and test a high. We do have a measured move that we have not completely reached or tagged, 53, 60, 75 on the monthly. So this is a tight bull channel. The first test or the break of the trend line will be rejected, and that's what we're seeing right now. So it is possible that the market wants to close this month on its high and test these highs, but if we do get a lower high, then we would end up possibly in a strong trading range, even if the market is, let's say we closed up like that. And next month, but it's again too early because there's still several weeks to go, we could go and we could close also on its low, but say we closed at high. It's next month, right? So June, we could go up, but only to trap everyone and then come back down. Or we're going to go up, test a high as much as we can, and then close this month towards its middle or on its low. That would be a lower high, double top, lower high, and then reversal back down. That could be a major trend reversal. That means you would expect this trend line to be finally broken. But problem here is that we're already going sideways. So we're at the highs. We're in a much bigger channel, bullish channel here, right? Market is still very bullish. So we could go sideways and up this month, only to reverse back down, but we have to trap the bulls first. In the meantime, bears see this as a strong leg down, so they want another leg down, whether it's small or not, but they want a second leg down. And they're eyeing the July 27 high, which is a breakout test. We could get a retest of that and maybe a double bottom with this bull doji. So this is a breakout test area for the 800, which is slightly above the EMA. And what happens is that if we keep going higher, the market is going to drag, the price is going to drag the EMA with it. And the EMA, notice what's going on here, right? How do you know that market is going to keep going higher? If this EMA is not taking out that is high and it just levels like that, most likely we will come back to it. And we might even go underneath, but that's where the bulls are waiting to trap the bears, okay? They're going to try to trap it. Problem here is that if this EMA does not take out that high, that trap is also going to be a bull trap, and we're going to get a lower high, head and shoulders, and we're going to sell. However, if that EMA, I always use this on a 5-minute chart as well, you kind of determine whether or not market is bullish. Look at that. EMA crossed above it and market keeps going. Even though it comes down, you see what just happened here? They moved underneath the EMA. Because we are bullish, they probably want to get back to those highs. They're going to trap the bears here. So we need this EMA to cross this. If we cross it, it's going to be a shallow pullback. We could just go back up again. And in fact, we could have a much bigger wedge formation if the bulls do show up. But if the EMA does not cross, we're not going to get this trap and go. We're going to get a trap up, lower high, and then sell underneath the EMA. Okay, so this congested area is going to be a target for bears once we get here and we start to move underneath EMA. Somewhere around here we could test. It could be maybe even 3 legs, and then go back up to that resistance, and then we could sell. That would create a head and shoulders. But remember, you're on a monthly chart, so bears need to show us some kind of a strong second leg and keep the EMA below July 27 high, and set up so that the first trap by bulls is going to be challenged by bears, and then we could sell. So it could be down, sideways and up, and then down again, or down, shallow pullback with a second leg, goes back and tests that high, drags the EMA, pulls back, and then we do a trap and we keep going higher. Weekly, this chart is very busy, but I didn't really change anything because we do have a expanding wedge here. We do have another 1, 2, 3. We're stuck in between this trend line and that trend line, so it's kind of holding. But notice what just happened here. Look how bullish we are on the weekly, right? There was strong leg, but we do have since October, we have been in a very strong rally, and this pullback, bulls want to go back and test high. But look where the EMA is. It's above that high already. So you see, we could go up, but the bears want a lower high and a reversal back down because they already see a wedge top here, consecutive. Actually, here's one, and they want actually market to come back and move below the EMA. If that happens, we create some kind of a lower high, and then we come back down. Then this SMA weekly, other than the 20 EMA, all the other moving averages are SMAs. So simple moving average, 50 is 150, that's 100, and that's 200. So then this would become the magnet, but that would put us well into some kind of a trading range. Now, again, bears need to show us that they are strong, that this is going to be a shallow pullback. What do we need then? We need a double top with the April 19 high. We get that kind of a double top, then I would look to sell. I would probably be sellers underneath that bar, but we need a strong, on the weekly, strong bear bar to initiate that sell underneath this doji. Right now we have an inside bar prior week, and then and there are probably buyers above that, but the problem here is that you're buying against 3 strong bear bars, and this last week ended up selling. First they bought and then they trapped the bulls, sold, and then Friday suddenly it just goes right back up. So can we actually test this area? Yeah, we could test that area, make a double top, then finally come down. But we could also have a double bottom, then we would just go right back up again, right? So that would create, though, some kind of a trap pattern for bulls. So bulls to get trapped, so everyone's buying, they're going to get trapped, and we could come back down. We have trend lines. We come all the way down and test this trend line, possibly these moving averages. Type trading range here, the midpoint of that trading range, the high and the midpoint would be magnet. So, but right now the market is trying to reach back up there. Daily, I'm still using this April 4th outside. That's an inside IOI breakout, and I have my targets, and we sold into those. I hope you guys did, because I did. And I kept saying that we're going to keep coming down, and we did. This moving average that's still SMA. holding. So we're going sideways and up, but we do have a wedge here. We do have a wedge, right? We're in some kind of a possible bear flag situation. So 1, 2, 3 is we might need, you see this gap right here? Bulls close that gap, but it's kind of weak close. So if anybody buys it, they're going to be trapped because market is going to want to come down here, test this area, and then we're going to go high. That's a big drop. You buy here, that's going to be about a 40-point drop before anybody starts to show up, right? So you're going to be careful there because look at here, right? So this is not all that great. This is actually a weak buy signal bar. It's there, but it is weak, and you're buying against this. Even if it goes up a little bit, it's going to want to come back down. So on the daily, you can kind of see that gap. If I'm going to be a buyer, I want to be buyer somewhere here. So even if it goes up, we're probably going to come in here, and that's where I want to buy. So I just have to be careful here because this is a trading range now. And even though this gap is closed with a bull bar, it could go higher. I just don't know how high it's going to go. There's a resistance here. Look at the consecutive selling. This selling is way too strong. What happens when this much selling happens and we go sideways and up? That's where the sellers are waiting and they want to sell back down. That could create a bear flag, but bears need to break this trend line. And everybody is going to start selling. That's the problem. You have to always look for a pullback. Then you can sell. Just like this breakout, everybody starts buying. You always have to look for a pullback into some kind of a gap area or some support, a resistant turn support. Then you can buy. So I'm hesitating buying and holding because of this area. And I like to buy somewhere around here. And then I like to see bulls actually push price up. So I'm still using this range. We are pulling back to the breakout point, outside bars breakout point. This is where the bulls want to test is, what about bulls actually test it? And the first pullback immediately generates buyers. Then we're going to test in this area, maybe even the midpoint, okay? We get another outside bar, then I'm going to remeasure it. But that's where we could go. The deepest pullback, it could be, let's see, leg 1. This whole thing is a leg 1 pullback, leg 2 pullback. It could be leg 3. Then we could start to come down. But I'm kind of hesitating. I need to see if bulls actually come in strong at the open. All right, so what happens if the bears start to show up? Remember, I found this area. This area is the area where the bears want to sell. Therefore, they need to create some kind of a strong lower high with an upper wick. Get some kind of a double top maybe at this breakout test area. Start to reverse down. There is the December 28 high is going to act as support, which happens to be the 150 simple moving average, this light gray line. But this is the area we could easily pull back. Some kind of a catalyst, something happens, but otherwise, market wants to test these highs. They want to take out these midpoints, get back to the highs. I do have a measured move target from early on. If market becomes very bullish, meaning I want to see bulls actually close above here, and then go and test the high and go up, come back down. Moving average comes along. We could move underneath, and then we could trap and then go. So there will be a lot of up and sideways, but that breakout could finally get us up to there. But that's, again, this is daily. May is at the moment is an inside bar and a bullish bar. Bulls see weakness, a deep pullback with several legs, so they think that this is good enough, but I'm worried about this area right here. There's probably sellers waiting here. So this week, ton of Feds scheduled to speak all week long. Thomas Barking is scheduled today, 12:50 p.m. Eastern Time. John Williams will follow at 1 p.m., so pay attention to those. Tuesday is Neil Kashkari is around 11:30 in the morning. We have consumer report at 3 p.m. tomorrow. So that's going to be a market moving event. And then Wednesday, Susan Collins and Lisa Cook, Philip Jefferson. I mean, starting at 11 on Wednesday, wholesale inventories at 10. If you're trading oil, the status report inventories come out at 10:30. Thursday is jobless claims 8:30 before market open. Then I don't think anybody's scheduled, but who knows. And then Friday, Michelle Bowman, Goolsby, Michael Barr. That's Michelle Barr, I think. I'm not sure. And then a Treasury statement at 2. I don't know all the Fed members and their names, who's who, but I would pay attention to Goolsby because I believe he is the right hand to the Powell. And today, Barkin is a major name. Kashkari tomorrow is major. So you guys have to pay attention. So this week is kind of a Fed week. Things can move along fast. I mean, last couple of weeks we had enormous amount of volatility in the market. I mean, it was the FOMC, of course, rate hikes, and all the employment news, came out. We added very little U.S. jobs as it reported, so that doesn't look good on Feds because their number one job is to create jobs. So that affects the inflation, that affects the decision on the rate cuts. I mean, I don't know what they're doing at this point, and I don't care. I don't really pay attention to all of that. I just pay attention when the news is scheduled to come out when I'm trading, and I try not to. Like FOMC, I didn't even touch it. I was done before FOMC, and I actually put in like 1 or 2 trades that day. I was very weak. I just didn't want to trade all week and just wanted to take it easy. And sometimes you have to get some kind of a separation from trading. People burn out because trading is such taxing job. You guys need to pay attention to your body's rhythm. And if you feel weak, burn out, just step aside. Even if you are successful, doing great, sometimes trading every day creates weakness, and one day it hits you and your body shuts down, you can't sleep anymore, or you just want to sleep like all day and do nothing. Sometimes I go through that, but I was dealing with some health issues, and that's why I took the team was very kind, and they just took over some of my days, so I really appreciate it. But it was a good break. So I tried not to trade all week, and so I'm fresh now. I want to start over, and looking forward to this week. But hopefully we're not going to get that much volatility because it makes things very dangerous and risky. Is when volatility is too high, my number one rule is do not trade with many accounts or many contracts. When the volatility is high, I kind of know by looking at the ATR value here. If it's more than 10 points or between 7 and 10, volatility is pretty high. I need to lower the contract sizes because market is already moving too fast. So I will be making my average daily point goal. So that's not going to be a problem, but it also can move to the other side very fast before reversing back up. If I'm long, I have to be open market coming back down. Like, look at here, it's up, and then it comes back down, and then goes back up. So if you're trading with multiple contracts, you're risking too much. Plus, you're buying way too high anyway. It's just gap up. But anyway, in a situation like this, what would you have done? This is basically you got a gap up and you got a gap down. You see something like this, a bar to the left taking out way too many bull bars with gaps. Put the stop there. This is your risk, okay? And you look for a 4-to-1 target. So basically, okay, so that's your stop, and that's your 1R, that's your 2R. They started taking profit because it's also double bottom. Then it just came down more. That's your 3R. The problem with the 3R is 3R is like a stake in the ground. It's very important. Traders look for is how strong the close is below 3R, whether market is going to continue into 4R, 5R, 6R, so and so, right? In order to do that, we need consecutive bear bars closing below 3R. We get that, then this is definitely in the bag, but we don't get it here. So you do have also a wedge there, wedge bottom 1, 2, and 3. So you have to kind of think of, okay, so this is it. Bears are not able to move this any further. We are going to trap the bears underneath the EMA or at the EMA. I need to wrap up my trades. So that's what you're seeing here. But I see something like this. This is basically my max risk, and I'm going to go for at least 2R. And you get it, it goes sideways down and then gets another leg, but that's all you're getting. So you see a bull bar like this, exit out. Okay, you are done. And what do? Is I would then do a similar measurement. You see that right there? This is my risk. The smallest I can do, oops, sorry. I always measure it the wrong way. So here to here, right? So I'm gonna put it there. So I'm going for 1R, 2R. They're taking profits. Now we're closing above 3R. Where do you think it's gonna go? It's gonna go to 4R, 5R, 6R, possibly 8R, which I don't have, but at that point you're trailing your stop, right? This stop now goes up. So now look, EMA actually took that lower high out. So they're going to keep buying the pullbacks, and the bulls are buying the pullbacks. So where they're going to go? Your target is the prior highs. Market is probably trying to get back up here. Okay, and that's what it did. Couldn't really get there, ran out of time. But right now we're going to actually open up way up here. Pre-market is at 51.77 area, 76.75, 77. So we're going to open up right around here, so you can see market ended up going and testing that high. So but be careful, we might pull back because we're going to gap up so much so that I don't know how far we can go. How far we can go? Right there. So we could go up possibly 77. 3-4 points more up, test this area, and then come back down to the Globex high. Although I think I'm going to have to, this is the Globex high. So we might reach there, only to come back down. We do have a wedge top, 1, 2, 3. And another way to find targets, say you sold it, is, 4R is great, but what's important is what's on the chart. That's right there okay. You need to see that this is a breakout test. It's going to act as support. If we are not closing below 3R, that's also another reason. So you have to exit out. So you get a wedge bottom. Somewhere around 11:30, I look for major trend reversals. And somewhere around 10 o'clock is with the bar 6 and 7, I look for double top or double bottom. We get a double top. And the strong sell signal is market will sell. Market will sell even the pullback right there. And they did. But then around 11:30, nothing's closing below EMA, so I'm looking for traps. I'm looking for bears to get trapped underneath the EMA. And it's a great place to trap them. It's also a support. And a strong bull bar you can start to buy. Possibly they're going to buy the pullback. You get a spike channel. Channel began with bar 28. We're going to test the bar 28 high, mid, or low, and we did. So market is giving you a beautiful buy signal, bar 42. If you're worried about bar 41 gap, then look for bulls to close this bear gap body. Then you look for a pullback, and then you swing. And bar 49, even though it's a doji, I don't like dojis. They are indecision bars. They always throw me off. This is a good doji. This is a bad doji. But what do? Well, same thing. It's a rejection from the EMA. I'm probably not going to buy above 49. But there's a confirmation with bar 50. But what do? Where's my stop? So I'm going to do the same thing I did earlier. where do I put my stop? Right there. That's my 2R right there. See, this is a free indicator. I posted it last week. If you're interested, just hit me up and I'll send this to you. Or I'll just put it right here right now. Hold on. I did come back, Tim. I'm like, you were getting too comfortable taking over my days. I'm like, I gotta get in there. This guy's taking over. Just kidding. I was so thankful for you to just so last minute show up there and just fill in. Really appreciate that. What was I doing? Just got distracted. Oh yeah, I was gonna give you guys the indicator. So give me a second. Where do I keep my indicators? Oh, here we go. Wow, you take a week off and I completely forgotten how to navigate on my own computer. Okay, good thing I'm organized. Okay, it's not here. Okay. I said I'm organized, and I can't find the indicator. Go figure. Oh, here we go. No. Thanks, Amy. Okay. All right. So what can happen today? Well, we're gonna get popped for sure. And then we have a wedge situation going on here. I don't know if we're gonna be getting there, but it is possible that we might. Or conservatively test around here. And that kind of aligns well with these levels on the Globex. The market is pushing higher. All right, we have a new Globex high. Adjust that now. So the 50 SMA on the daily chart is magnet 51.85. So we might actually get there at the open. All right, so not much time left, so just give it a. All right, here we go. Market is up and about. Need to adjust this. Pretty wide range today. Find a midpoint. There's a breakout area. Happens to be a midpoint. We could actually come back to that. That's right around here. Or we're going to come back, pull back 1/3 of this range, which is right here. 1/3 of the range is right there, and look for support there. We got a wedge top already on the Globex, 1, 2, and 3. So there's a wedge reversal possibly, but strong bull bar. So the bears really need to reject this bull bar with a bear close somewhere down here. There's a bit of a gap here, but they could close that gap and get to the EMA. This is the 1/3 pullback of the entire pre-market range. So we might actually test that, but I don't know. There's not much information here for me. I need to wait for bar 1 and 2 close. But right now it's too high, probably. So if the market shows up signs of this is too high to buy, then you're going to end up getting 2 bear bars, which can create bear trend from the open, but I don't think we're ready for that. So let's just wait, because there's a magnet on the daily. Remember, daily chart. We have an outside bar. Please don't freeze. Here we go. Here. See that outside bar? Breakouts, that's where market could also reach after testing. I think I just froze my application. This daily chart, no matter what I do, I cannot save this chart. Okay, just give me a second. I'm gonna follow along on TradingView or Thinkorswim. Such a pain, this chart. Always freezing. It'll come back, but I don't know when. I just don't have time for that. So just give me a second. Everything's frozen. Come on. I want to take a trade. Okay, here we go. Maybe it is coming back. Slowly. All right, I didn't have to do anything. Great. Back to normal. I mean, it's supposed to handle that kind of data, that much data, but is okay. So I think you can see it. I just don't want to touch this chart until I figure out what the heck is wrong with it. So, okay. There's some bad news coming from the Eastern Europe. Russia just announced that they're going to target the British army locations because apparently, I don't know what to say. It's just, I'm just listening. It doesn't sound good. So just keep an eye on news. I'm just listening to financial juice. No war news is a good news. So just keep an eye on news. I'm just listening to financial juice. No war news is a good news. So looking for is bears to close this bar on its low. I'm scared to maximize this chart and look at the data. Maybe I could do it this way. Probably am loading a lot. Yeah, I'm loading 300 days. Okay, let's do that 100. All right, Tim was messaging me. He said the same thing. WQ went. That should help, but it's not going to because I've done this before and it didn't make no difference, but I'm willing to play along. So, okay. My chart is behind. I am behind. Look at that. So it did actually cause an issue. All right, so give me a second, please. Thank you for that. Let me restart the data connection. Thank you. Yep, I see it. We're actually are on this bar 2. That daily chart messed up the data connection. Sync. All right, so the bar 1 is a weak bear bar. Body closed above its midpoint. So the bar 2 is trying to sell at the moment, but we don't know. So I've taken no trade. So there's some kind of a lag. And I'm using rhythmic connection. Could be the problem. If it persists, I will switch to a CME connection through another broker. Bar 2 is trying to close bullish, so it could go and continue to go higher. I have targets on the Globex, 5180 and 83 area, possibly 85. I have sold nothing. I bought nothing due to the lagging data connection. I wanted to sell, but once I realized that bar 1 actually closed above its midpoint, I'm not interested in selling anything. So market might be interested in going higher. I don't think the market thinks that this is too high to buy, but bar 1 is not a good sign. Should have been a bull bar, but it's still a very weak bear bar. So it looks like it's trying to reach this area. So the bulls closed this bar bullish. We're going to continue into 5185 area possibly. We might even go higher if the bulls actually start to accelerate. We can end up going and testing 5195 if we get above 85. But we're going to get rejected from 85 briefly. But the rejection is shallow and we get above 5185. expect 51.95, 96 area tested above. 5,200 is a round number. Market is probably eyeing that, and get back to it. We have a breakout from last week's high. This is my hourly chart. You know the drill. This is RTH. So I take the Monday through Friday, 5 days range of last week, and we have a breakout. So I've got a trap zone. From there to here is the trap zone. Even though we're bullish, we could go there and come back down. This is the first shallow bull target. Or we continue there and then we come back down. So watch out. Generally, the first breakout I don't entertain, because then you have a strong resistance here. Last week though, on the server, I told everyone that I wouldn't sell this. We're gonna trap the bears. This is right here is a trap double bottom neckline, which gives you a possible measured move target. Market could be on its way to up here. I don't know if we're going to be able to do that. Or you could say, no, this is the breakout. That's a weak. This is the measured, but you see that aligns pretty well. We could still trap the bulls. I like to be conservative, even with my measured moves. But I think this is gap area is market is headed to. That's what I said. There was here a sell zone, but I told everybody, even though we're going to try to sell, you need consecutive sell bars, consecutive bear bars. We only got one. And I told everybody the only time I would end up buying if I see bulls actually demolish the sell zone. And they did. They tried to sell it. I didn't sell it. I wanted to see another bear bar, then the pullback I would have sold that. This is an hourly. We never got it. So the bulls are on a mission. So what are they doing is I said, I want to see this right here violated. And they did. 2 consecutive bull closes. They're buying now. That's what I would buy. Now, where is it going? There's a gap here. It's probably bulls want to get to that gap, but there are sellers waiting at that gap. Okay, so be careful there. Even if we go strongly high, I think, even if we take out this, probably sellers waiting up there. Yeah, we would then have a deep pullback. All right, so the magnet on the daily, still on its way up. I'm gonna clean this chart up a little bit. Okay, here we go. That's cleaner. Pay attention to the lines. Tested those lines a long time. They're not traditional fib levels. I don't use traditional fib levels. I use the round measured move targets like 100, 200, or mid 150, like 50%. Most likely. But then I have these trap levels. I do pay attention. That's the trap line right there. The top part of the trap zone. And that's why we're stalling there. Bar 2 is a good close, but upper wick and a lower wick. That makes it a bit confusing, but it is bullish at the moment. So it's still making its way up to the trend line possibly. So the bulls need another bull close here. Taking out the upper wick of bar 2, closing a bull bar on its side is a good continuation momentum indicator, but we don't have that yet. So you kind of have to wait to see if bulls got the momentum here. So bar 3 closes on its side, then you have the momentum on your side. No, I mean, volatility is fine. It's decent. We reached my target on the Globex. We didn't pull back. So, but can we pull back now? I think there's a little bit more room to upside here. Market is probably trying to get to 85. Very nice. That's your momentum right there. But probably is some machines, their machines are waiting at the 51.85. So bulls will probably going to start scalping there a little bit. And if we start to pull back, eventually we will, because it's gapped up from the EMA, so the bears trailing their sell stop orders. Now it's underneath bar 3, and they're going to try to get in and sell a little bit. But if we take out the bar 3 high, close another bull bar, then they're going to trail the sell stop orders underneath bar 4. And those stops could be the bull stops, the bulls who bought. They're trailing their stops because they don't want to give back, because they know at the open you get these wild swings. If it's going up, it could also come back down. So and then the other stops are the stop entry shorts, bears looking to enter as bulls take profit as their stop get hit. So that could create a frenzy down with a couple of bear bars down. So everybody's positioned under bar 3 now. Hopefully I'm not behind anymore. I'm checking everything. Looks good. And eventually we could pull back, but I need to see bulls taking profit here first. Then they're probably tightening their stops underneath 3 in case this is just too much of a gap up, and we won't continue to go higher. But I think we will at least test this area. I said the magnet is the 50 is SMA on the daily chart, which we are right there at the moment. And then we are so close to the 5185. Like 2 ticks away. Like 2 ticks away. Here we go. We're just about to test that 85, 5185. Sometimes we get like 1 or 2 tick close, and then market just reverses because there are always sell machines, bear machines waiting there. It's a manipulation area. It only works for S&P. Manipulation area. It only works for S&P. But if we do close a bull bar above 5185, we will continue to go higher. I did say that you need to go long ago, not just now, Steve. I didn't say you should go long now. We were kind of long here. Bears did not close a bear bar, and even the latest bar 3 is a momentum, good indication. I don't think you heard me. So you've been always in long since yesterday, meaning Friday. So this is just a follow through. They're trying to get the third push up. But I said you also need to take profit around 5185 because the bear machines are waiting there. So I did actually say that you really needed to go long here because bears did not close a bear bar. So the market actually decided that this is a fair price. They can actually buy and mark it up. And that's why I said 5185 is a good place to take profit or expect a test. It could go higher, in fact. The next target I called possibly 86 area. And if we close above 85, we will continue to go into 95 area. So the market is still bullish. Into 95 area. So the market is still bullish. Some profit taking by bull machines. Market double top, bar 4 and 5. If the bears do close a bear bar here, they might bring market down maybe towards the bar 3 open or 3 low, but probably buyers waiting there. Only if we close a strong bear bar. Bulls are looking for continuation. They want to get above 51.85 and go test 86 and further up. Just looking for a little bit more. Maybe even reach this area, 96, 95, 96. Like I said, we might actually tag and then come down. Outside bar breakout point is also magnet, which is 51.92, which is that gold line on the daily. And make these bars a little bit thicker. Is there some kind of news that we're waiting for? So we're only less than 6 minutes away from 10 o'clock. Nothing is scheduled, but still machines assume that something will happen at 10. Some volatility might come in. Outside down bar is bar 5, closed on its lower level. And it's a doji, but the bear is selling the close of that bar and trying to get, actually they start to sell underneath bar 4. Problem here with bar 4 is a strong bull bar. You got 3 bull bars, it's difficult to sell. So they sold higher probably, they want at least a 1 point. So market could test 81 area, 51.81, maybe even lower if the bears can close another bear bar. Because remember I said some machines trailing their stop, these bulls are trailing their stop, tightening up because of this gap. So some bulls are kicked out, okay, out of the market. Some bears entered into the market, but they were not happy because bulls wanted to sell higher, so that created a micro double top. And then they closed the bar 5 on its low, so I want to see some bears at least make a 1 point is scalp here. So that means 81.25 would be their 1 point scalp. So they want that 1 point scalp before market continues to go higher. So I'm waiting to see if we can actually tag that. Since ATR is 396, so that's 3 points and 75, 3/4, right? There's a 1 point in there already. There's 2 points in there, so this can actually go down to 80.25. So I didn't take any trade here, even though I told you guys it's going up. I wasn't mentally ready because I was just fiddling with a bunch of other stuff. But I wanted to put a trade in, so I did sell and I grabbed a point. Nothing spectacular, but it's just because I knew those bears at least looking for 1 point, and that's probably all they're going to get. Although ATR says it could be 2 points, but half of the ATR is already 2, but it's not 225. So in order for you to make 2 points, ATR needs to allow you at least minimum 225. You're not getting that. So best you're going to make is a point. So I exited out. I'm not going to linger because this is still strong, and the bulls probably want to push above 51.85. But there was a counter trend there, even though some people say, hey, that's just 1 point. What are you talking about? Why didn't you just go long? I was too late to go long. I just didn't want to enter up here. And so I saw an opportunity to grab safely at 1 point, and I grabbed it. Now, I don't have to talk about what I did there, but I do talk about it because I'm taking a trade, and I want you guys to know why that was a good trade. Anyone can make money by going long or going short any time of the day on the 5-minute chart or any chart, right? You can, if you structure the trade right, there's always some sort of a trade available to you. Traders profit on S&P is 1 point, all right? I always think of that as a 1 point. That means 5 ticks. But when the ATR is, these days, average ATR is now more than 3 points, more than 4 points, sometimes 5, so that your trader's profit is no longer 1 point, it's average 2 points. So market could actually come down to 80.25, but I just took that 1 point due to 3 bull bars. And there's a gap open here with bar 2 close and a 3 open. If we could get another leg up. So I just grabbed that 1 point. I actually entered with multiple contracts, so that was a decent scalp. But if you're long, you're long. You don't have to worry about it, because if bears don't get the second bear bar, bulls can go above that double top, micro double top, and close a bull bar above it. That would be continuation for bulls. All right, so bar closed is on its high. It's no longer IOI. So the bulls now want to take out the micro double top. They're probably buy stops above that double top. So they will probably going to get activated. It could accelerate up very quickly. But the bulls really need to close above 51.85. And if bears is, if market sees a lower high there, a double top, lower high, market double top, lower high, neckline 5 or 6, and they will cancel out their buy orders, and they probably have stop moved from 3, maybe underneath neckline, and they might exit out, because if the bears take out the neckline like this, the first pullback they could sell. So bears who sold, okay, is disappointed. They're selling up there because it's a small trading range. So they're trying to get back to where they sold, which was 1 tick underneath bar 4. Now look at bar 7. Did it come down there? Yes, right? So if they have taken profit but kept a runner and that runner is not working, they're going to sell higher, and they're going to expect market to get back to where they sold, and they did. But if this bar now closes bullish, many bears will exit. Then we can go higher. Okay, so the bear's trying to close another bear bar so they could get a first entry short and a second entry short. It's right now it's sideways. Is after bullish. So we could come down a little bit on the 1 minute. This is actually much visible. It could become a bull flag. Okay, so it's basically after gap up and bullish move up, it's going sideways. So it's kind of accumulating. Okay, so the market could be seeing already a wedge bull flag. Oops. But we made a new high there, so that's 1, 2. We might just come down one more time. Everybody else starts to sell, and then we could just trap and go up. But right now you have 1, 2, 3 legs. 1, 2, 3 legs is so for bears 3 legs, bulls 3 legs. A tight trading range 1 bar is we're going to get a breakout. So if you actually just find a trading range, find its midpoint, and look to see who does what. So this is where I do not take a trade. This is a 1 minute chart. I'm just showing you what I see, right? You got a leg 1, leg 2, leg 3. You got a leg 1, leg 2, leg 3. And we're right at the midpoints. How would this break out? Well, we'll find out. That's why I put the midline 83. If the bears close below a bear bar and take out this trading range lows, they're going to try to sell it, right? They're probably going to try to come back to the bar 1 high. But if they fail, we start to close bull bars, and then we're going to break out to the upside. Right here, you have also a triangle. Triangles are trading ranges. That is the apex of the triangle, or the midpoint of the trading range. Same thing. So you just pay attention. You do nothing here. This is way too dangerous. Bulls trying to keep it above 51.83, but they need to close bull bars. Now, I'm not going to stay on 1 minute, but you kind of got the idea, okay? So let me get to 5 minutes. So you can see the trading range right there. It's also a high 1 and bulls 1, high 2. High 1 above 6. So you never buy a high 1 because it's probably gonna pull back. Bulls looking for another bull close here. That's it. See, it's now activated the buy stop orders. And if you go back to the 1 minute, we're way above that midpoint after making market printing 3 legs, bear 3 legs and a bull 3 legs, and I made a decision and stayed above the 50%, and the breakout is to the upside. But you still need a confirmation, right? So what do you need? Is breakout is to the upside, but the body needs to close also above its midpoint, above the micro double top 4 and 5, right? If it closes on its side, it's going to go higher. Market is trying to reach right here on the daily. All right, so the bulls did close a strong bull bar here, but you do have a leg up. Pullback is leg 2, or one big leg, pullback, leg 2. We might get one more leg up, but we need a follow through bar. There's a tight trading range here. 1, 2, 3, 4. It's a lot more prominent on the 1 minute chart. So if any bears actually sold, they sold higher. They're trying to bring market back into that trading range. When do you give up being a bull? Well, if we get a strong rejection bar right here, you could say this is leg 1, pullback, leg 2, pullback, leg 3. You have a wedge here. But now the bulls are stuck. So what do you think the bulls are going to do? They're not going to allow bears to sell this very quickly. It has to be a one big give up bar. So they're probably waiting somewhere underneath 8 or somewhere here. Okay, they're going to buy as this comes down, and they're going to try to break even and exit out. But they're not going to let go that easily because it is disappointing. And the bears are trying to reject this and come back down. But probably early buyers are in that trading range midpoint area, okay? And they're already, look, they just hit it. But if the bears do close a bear bar on its low, taking out the open and the low of bar 8, that's a problem. They can bring the market all the way down to the 5 low and 6 low, 3 open. But there will always be buyers at the low of a strong bull bar because they bought it. They bought even the close of bar 8. They just now bought again, brought it to midpoint. That's break even, but they want to bring market back up to the 8 close. When would they exit out? If they see a strong bear bar, they could exit out, and that could generate more bear bars to the downside. So you do have a possibly this, so we could end up coming back down here if the bear bar closes. And why is that happening? Is on the hourly, we reached a strong sell zone, but we don't have a good sell signal bar on the hourly yet. And we still have 16 minutes. And on the daily, we reached a magnet, so those bulls are taking profit. Kind of disappointed they can't go any further, and if this bar closes like this, that's not going to be good for the bulls. Pointed they can't go any further, and if this bar closes like this, that's not going to be good for the bulls. So I'm waiting for is bulls to try to close this bar on its high. So I'm waiting for is bulls to try to close this bar on its high. If they fail, then that will be a reason to exit out. I don't have a good bear close to say I should exit out right now. I always expect if I see something reasonable, but something else happens that makes me question, I always give whatever that reasonable side to try to break even first. So I don't just sell this bear bar just because it was a bear bar and it was strong a couple of seconds ago, 10 seconds ago, 20 seconds ago, whatever. That's not a good reason to exit out of your long and then sell right away. That's not a good reason. You need bar to close to make a decision, not in the middle of the midst of bar printing. Because those bulls are disappointed. They're not going to hit, oh yeah, let's just take the loss and exit. There's no loss yet. What they do is they buy underneath that strong bar 8 or at the lower third, and they will try to bring it back to where they entered, which is the close of bar 8, which I said that it would probably going to happen. And look where the bar 10 is testing. Well, it didn't really quite test it yet, but which is the close of 8. And if the bar 10 does not close above the close of 8, a strong bull bar, then those bulls are going to be, okay, this ended up becoming a break even. We can exit out now if the bar 10 closes on its low. Then you're going to see is market exiting out, and we can come back down and test the bar 8 low. But there's no reason. If the bar 10 closes on its side, more bulls will buy, and the stop will be moved underneath 9, because that's an outside, inside, and another inside bar. Inside bar closing on its high, buyers will buy, looking for higher prices with a stop under 9. But look at where we're stalling. It's an important area. It's the 8 close where everybody else bought, right? And those bulls are now they're trying to make a decision. Now is a good time to maybe exit out, but they will look for a bear bar close at the midpoint of 9 or on its low with bar 10. So many bulls did exit. Now those didn't exit, their stops probably got hit. But remember I said we're probably going to test the midpoint of this tight trading range. We are testing we're going to come down and test the 5 low, 6 low. We just tested 5 low. So if anybody sold, scalped, and that's why this body just went up. But it closes lower, then you have, if you anchor it from there, you have this trend line. Market could go and test that trend line right there. And that's what's probably taking place right here. But you understand now how bulls exited, right? So they waited for where they entered, tested. They don't see a bull bar closing. They will not linger. They will exit out. As they started to exit, it started to come down, right? There's nobody left to buy, so it's coming down. Where's it going to go? I always take those as my areas of interest to go and test. So some bears scalped there at the low 5. Can we still come back down here? Still bullish. It's leg 1, pull back. This could be the bulls buying even lower, trying to break even, because there is a breakout test area. It's a good place to buy again and break even. So if you are a bull, right, you're looking for a place to buy, a logical place to buy and fix it, that you weren't fast enough to buy it at the low or the open of 8, and you couldn't exit out. Only the machines will do that. Others will look for a logical place like breakout test. So you are a bull and both there, and this is a breakout test area, which is support. You buy it. Where's your break even? Right, average price is, exiting out with almost no loss. That right there is that midline. Now, if the bar closes bullish, then you can expect market to get back up there again. That will be your 60% probability buying low is, and then expecting your original price where you entered long to be tested. This is 80%, this is 60% probability. So we got the 80%. Is now, how do we get there? How does that increase when the body closes above that dash blue line? Okay, if it doesn't, then that's it. We could come back down. This would be a leg 1 pullback, leg 2. But I think this was a leg 1 pullback, leg 2, and leg 2 trap. So the bulls are trying to get back up there now. And that's how I would give up. If I'm still selling, that's where I would give up selling. Bears are waiting for a decision to be made. If the bulls cannot close that bull bar above that dash line, then they're going to stay in their short, and they're going to expect this trend line to be tested. Bulls trying to close above what seems like a left shoulder head. They're trying to close above this with a bull bar to eliminate the head and shoulders pattern and go test the high and then break out to the new high. You can see how they're increasing the probability to get to the original price and get a breakout. The probability to get to the original price and get a breakout. So that means the bulls need to, at least minimum, bar 11 has to close above that dash line, above bar 4 and 5, then expect bar 8 high to be tested and broken. So you have the outside bar followed by an inside bar, 8 and 9. And bears try to sell, but they got trapped. So bulls took over. They went back up to the original price, tested now, but they close a strong bull bar here. They can continue to go higher and test way above bar 8, which is the outside bar. But it has to close bullish. If it fails, anybody who's stuck here will be selling higher, but I don't think this is a small trading range, so the bears might be selling here to bring it back down, but I would wait for bar close here, bar 12. Bulls did close above the micro double top 4 and 5, so they kind of eliminated that left shoulder, but other bears are selling at the high of a small trading range. They're trying to get a break even before market continues to go higher. And another reason why the bears couldn't continue to sell, and you should know this, when you have an outside inside, when the outside bar's low is not truly taken out with a bear body, that becomes a trap. So you're stuck in this trading range right now. You're going to have buyers here, you're going to have sellers here until one side actually wins, right? This is how I would measure. So how do I determine the bulls are going to win this? See this red area, 2 lines? It's a little bit faint, but I would look to see a bull bar closing like that. This is the red line, this is the red line, right? We get a bull bar close like that, we're going to go and test that outside bar's high. And that's a shallow target and a breakout target. But first, the bulls need to close that bar above this line. If they fail and the bears actually close a bear body is below this line, they're going to then come in to here. So it's very difficult to trade this. It's going right now sideways and up because we are bullish, gapped up above EMA. but we are in also expanding triangle. So nothing closing yet. There's still 19 seconds. Either bulls will close right around here above, or if the bears close, we're going to come right back down to here again. And then if the bears actually take out the bar 8 low, then they can get a breakout to the downside. This would be my target. That would be my target. But I don't. Okay, bears. Bears did close a bear bar. I don't like to take trades here. If I'm long, I'm long. But I'm not going to sell here just because this bar closed. It's showing me a direction, but I'm not going to take any short trade here. Because in order for me to say the bears to control this outside bar, they need to take out that low with a bear body. So they have to close a bear body here. Then I can swing, expect these levels to be tested, maybe even further down. So it's very difficult here. This is where people take premature trades, and then if they made any money here, they give back everything that they made. So without getting that bear breakout bar below bar 8 low, bulls can still trap these bears trying to sell for the second time. So here is from the highs, this is low 1, but it's really bad. And we make another high. This is the second sell. This is their second try, low 2. So the bears are trying to swing this down, but bulls can trap them once again. So I would prefer the confirmation if I'm going to sell anything. That's also the second leg down, leg 1, leg 2. It's also a triangle, If bulls cannot trap the bears here and they cannot contain them, then the bears will get a breakout. But we need that bear bar closing below bar 8 low. Bears need to close a bear bar here. If they manage to do so, they could quickly come down to 80-50, 51-80-50 area, only if they do close a bear bar. And then they can even push towards 79, 51-79. No bear body closing below bar 8 low. But 2 bear bars, some bears did sold underneath 12, so they want follow through. There's no confirmation for bears just yet. But you get a wedge top, double top, lower high. So the bears see this as target and that as target. But where is the bear close? That would be the confirmation. If they can close bar 14 on its low, that would be a phenomenal confirmation. Otherwise, they could get trapped very quickly. This is where it gets very difficult. I'm drawing these levels but I might have drawn that wrong. It should be like this. So you see there's no breakout yet. So it's the entire range of bar 8. So bears really need to close below bar 8. We got a rejection here. No bull bars close there. Bears also did not. Bears did close a bear bar below that red line. So that's good momentum for them. They just need to give us a confirmation. Then their target would be here and then here. So we could actually, if you don't use this method, the way that I measure or look for confirmation, you can just simply use this anchored trend line, but only if we get a bear close below bar 8. Otherwise, bulls want to get back up to high and get maybe 1, 2, 3, the third push up. But that means they have to close above this midpoint of bar 8 with a bull close. So that's why it's very dangerous to trade inside an outside bar before you get any confirmation. It's just, it will trap left and right until it finds its directional breakout. But we also don't have a breakout bull bar above the high of bar 8 to say that this is going to break out and go to 51.88, 51.99.50, 51.88, 51.99.50, and right there. So we need a bull close now, is taking out the high of 8, because otherwise it's just going to be back and forth until it finds its directional. So I just sit and wait. I wait for, because this is a tight trading range, buyers below, sellers above, it's just going to trap you doing the wrong thing. Once they make the decision, I'll go with it. See, the bulls now taking out the outside bar 8's high, but they still need a bull close. If they do get the bull close, then they could get a follow-through buying all the way into 51.88 and all the way into 89.50, but they have to close a bull bar here above bar 8 high. See, they just tested the trap zone above. Because it's a trading range, there are always sellers there. They're trying to prevent bulls from closing above the trap zone line. Trap zone is a little bit above the outside bar and a little bit down here. So this is the trap zone. If they cannot contain bulls and the bulls actually close, we're going to breach this and we're going to get here. We might even test right there. So bulls really need to show us a directional breakout here and close. There's also already, well, there's 3 minutes here, so they might actually accelerate. Here we go. It's the shallow target right there. There will be some profit taken there. And if we get above it, if we close a bull bar, we're going to accelerate into 89.50 possibly. Daily target is also up there, which is right here. Market could be trying to reach the 92 area. 92 is slightly above here, but we don't have a bull breakout bar yet. We have a breakout, but it's with a wick, not with a body. So bulls need to close this bar above bar 8 high, and then they can accelerate. Nothing. So trading range highs, bears are selling because they're trapped with that second leg and selling underneath bar 12. So they're selling from the highs and they're trying to prevent the breakout by bulls. But there's still 50 seconds for bulls to close this bar above bar 8. If they manage to do so, then that's good for them. But so we're retesting the midpoint of is outside bar 8. If bulls can contain bears right here and prevent a bear body breaking below and closing below the midpoint, which is that dash line, that will be good for them, but they have to do it right here, right now. Otherwise, we're going to get a bear breakout to the downside because we do have a wedge here. Okay. Wedge top. All right, so this bar did not close below bar 15, but if we do now, they can accelerate and we could still come back down here. See what happened there? I hesitated. I couldn't buy because I needed that confirmation for bulls. So now bears are trying to get that breakout. They came back to where they sold, which was underneath bar 12. So they made money now, but now they want more. So that means they have to close this bar is as low as possible. Then their first target, but they already tested, first target to break here, but this is the actual target. This is where they could go. They could also test right here, which is, happens to be the trend line, but we need that bear breakout right here. So what happens if we don't get that bear breakout? Well, we go sideways and back up again. But so far, so good for bears. They just have to take control. I think the 11 o'clock news is what the market is waiting. No, that's 1250. Sorry, that's Thomas Barkin. So we might actually finally come down to 80.75, the shallow, but no bear breakout just yet. So looking for bears to take out the bar 8 low with a bear body and just accelerate down. No decision for bears. Okay, so that's last minute and a half, minute and 20, almost 20 seconds, is if they get a breakout here, they get a breakout. If not, the bulls will trap them once again. Bulls trying to trap those bears. Last 40 seconds. Very important. This bar closes bearish. That's good for the bears, but if it doesn't, then bulls will trap them. Not a good close for bears, but it's also not a bull bar either. Very difficult right here. We're stuck in the middle. It's super difficult. So you can see that bulls now trap the bears once again, but it's very difficult for me to do anything. I just have to wait. So far, bulls are in charge because look at what's happening here. Every time you have consecutive bear bars, bears are not able to get a breakout. So it's still always in long, but bulls also didn't do all that well here. So this is their last chance to get that breakout. If they do get the breakout, then we will get above this right here and go to the new high. But I can't do anything because it's a tight trading range. Therefore, it's triangle, right? So it's just, it could come down, it could go up. There is an apex of the triangle, which is the midpoint. So I would say, look, they try to buy, came back down, they try to buy, came back down to the same price point. Bears want to move underneath that and bring market down to here. Bulls want to keep it above and go and get a breakout. So still no decision. This is where you have to just step aside, just wait a little. So you had expanding, and then you had contracting. So now we're back is inside that contracting is triangle's midpoint. So you can see that bulls trying to close a bull bar. They're trying to get back up here. They have to close a bull bar above the 8 high to get a breakout. They fail, we could still come back down. Very difficult. I cannot trade this. If you're long, you're still long. Your stop is somewhere down here, okay? Because we took out that high. So you're still long. You're still expecting price to go to the higher places. But it's just, if you haven't done anything, you can sell high, scalp in the middle, buy low, scalp in the middle, or scalp at the high and be done with it. You just cannot hold on to a trade because this is a limit order market right here, and it's looking for a direction to break out up or down. So it's a scalping mode. It's Monday, it's slow. Well, bulls tried several times, but the only advantage they have is being above the apex of this expanding triangle. But it's not all that great for them, because the moment we move underneath that line, market can sell very quickly. Sideways, I mean, there's nothing here except I need to wait for a bear bar to close here. If they do, then that's great. We can come down, but if they fail, we could go right back up again. But this is good so far. Bears need to close that bear bar. Then they can extend it down to 80.75 area, 80.50 area, maybe even further down to 51.79. Or perhaps they can swing all the way down to 51.72.73 area, but nothing decided yet. Still no bear close. We need a bear close for bears below this line. Bears below this line. That will be first scalp, possibly is moving down to even here. Now we just had a wedge top and a lower high, so market is coming down. That's the first scalp, but we could accelerate down to here. That's 1R, 2R. If you're going with the outside bar 8 breakout levels, then the target is 80.50 and then 79. I would scalp one tick above 80.50. But right now they're taking profit at 1R, but I like to see a follow through. There's a double bottom with bar 11, but I think the bears will break that. EMA is also target, but 2R is 80. It's right around 79. So I did say 79 is next target. 2R is one tick below 79. Bears could accelerate and sell into that, perhaps. Especially if this bar closes bear body. That is the breakout that the bear has been looking for. So they will extend the selling possibly into one time the projected target of bar 8's body, entire range, actually, not just the body. So it would be around 79. So 79 is right here. So I like to see one of these lines or the trend line to be tagged. But some bears are scalping here. Like I said, they will scalp if you go by the bar 15 sell signal bar, 1R, and then we might get a 2R right here. So we just tested 80.75, but not is necessarily 80.50. I would like to see bears do better here and keep pushing this lower. Looking for 79 or 2R, like somewhere here, be tested. Bar 1 high, open of the day. Also target. Very nice close by bears. So we should at least come down and test the 79. Trying to scalp one tick above 79. So let's see if I can get filled there. Come on, bears, you could do it. Waited for this breakout so long. Open of the day tick price is also magnet. Looking for a follow through by bears. Trying to go back to the breakout point which is the low of bar 8. See if there are any sellers there. Scalped around 80.50, but left some waiting for 79. I don't know if I'm going to be able to get it. I should. Trying to get back to the breakout point, which they're testing right now. I don't want to see midpoint of 8 taken out once again by bulls. Many bears will sell up here because they're disappointed with this bar. It is trying to become an outside up bar now, and technically it is. It's low, it's lower than 19, and its high is equal, so that makes it an outside up bar. If it closes bullish, many bears will exit because their runner is not reaching. There's a gap here, so some buyers did show up at that gap. They're buying, and this bar closes bullish, many bears will exit out here because we could go right back up to where their stops are, which is right there. So we only got 1.5 R, because if you actually measure, right, nothing closed below that to keep swinging further down. But the bears are disappointed. They're stuck. They are actually stuck underneath bar 19. So they is going to sell somewhere up here to get a break even at least before this continues to go high. So this is disappointing, but it's a bullish market. So we're still above the EMA. Can we actually swing from here and get higher prices? Yeah, I mean, we might. Especially if we take out the bar 8 midpoint, which is 85, 51.85. We take out 51.85 at a bull body. Bulls could end up buying. So I went with, you can go with this, but I found that this is a lot more accurate in terms of finding targets. Like this is the last outside bar. We got stuck inside of it for a long period of time. So I know that market is respecting bar 8's high and low. Bulls failed, tried several times. Bears sold with second entry short, but got stuck, so we now have a new high. Second entry with bar 17, they finally get a breakout. You see why this was a target? We don't have a close below it. So that means we're not going to come down to here. I scalped here, I left a runner, but now I'm out. I'm no longer in this short. So I'm measuring this bar, okay? Just to give myself some kind of a blueprint, like this is throwing me off. Here we go. See, nothing closed that, and that was 80.50. I kept saying I'm going to take profit one tick above. I'm also holding for 79, and I'm one tick above, but nothing closed, so I exited because I don't want my stop to get hit. And my stop was somewhere up here, not up there. We are testing the midpoint because why would I put my stop there, Bo? First of all, I don't want a big risk because it could just go back up. And second of all, we have a breakout, so that's fine. I'm looking for a continuation. The only time that I would give up on bears if I see bull bars closing above this level. And if that happens, I don't want to be in the market and wait for it to get back all the way up here and take everything that I made. So there are limit bears disappointed with bar 19 getting trapped at the low of 19, selling here. They want market to come back down to here. You have an outside up bar here, pretty strong. I don't like it when bars are this big. It creates a trading range, and anybody who is buying bar 20, okay, could get trapped very quickly. But it is a good bar. The problem here is that stuck bears. So they're selling probably the close or above bar 18, and they're looking for midpoint to be tested. So if you buy this bar, completely discounting the bears, thinking that, oh, this is just going to go up and up and up, it may very well. But first, you are overlooking the bears desperately trying to bring market to a 50% and exit out. And if they do bring it to 50%, they could easily bring it down to the 19 low or 19 close. And when you buy a bar like this, you are going to be in major trouble. Okay, we're not going backwards, Amy, so all the way to here. Which bar is your outside up bar or outside bar followed by an inside bar? Do you see any? No. Do you see now? Yes. So you don't see the bar 10, so you can't make your decision. This is an outside bar followed by an inside bar. Many will sell, stop above this bear bar and looking market to come down and at least test the 9 low. We tested the 9 low. Those bears took profit. And they might be swinging, but the problem here is that you don't have a confirmation of a breakout with a body. So now bulls will try to trap those bears because they know their stop is probably above the inside bar 9. Okay, since we don't have a solid breakout, you should be basing your trades with the outside inside bar combo, bar 8 and 9. If you use bar 10 and 11, that's fine. Then use bar 10 and 11. Doesn't matter. So if you use bar 10 is your outside bar and followed by an inside bar, this was your breakout target. You needed to scalp there. But since we have already a valid one and they're almost the same size, there's no need to resort to a new one. So I'm using that. So you see the 50% held. Maybe I didn't need to exit out, but I did. Doesn't matter. So now if the bears actually close around 19 low, they can then come down to the 79, further even down here if they can close below open of the day tick price. Market is trying to stay above open of the day tick price, so it could stay bullish. But you could see what just happened there. So would you have both bar 20? I see something like that. I am not going to buy it. But if I see it and it's going up, I will exit out because I don't want market to go all the way to my stop area. My stop was above. Now I could have sold it probably and break even with that final contract that I was holding, but who cares? It's already a mess. I can always structure a different trade here. So you have a double top with bar 18 and bar 21. You have a bear flag, but you have leg 1, leg 2 trapped. Bears are trapped, so they're fixing. Now, if we continue to take out the 21 low, then this is a bear flag. We're going to take out the bar 20 low as well. But that decision has not been made. Probably they're trying to come down more now that they sold at the midpoint. Market, what can market do today? Well, I'll tell you. You don't need this. You can have it on your chart. Market could go sideways and up today. So we're back at the EMA. We could actually go like this. I don't know if we would take out this high, but eventually we would. But then you would have possible wedge top somehow. We would go up and then finally come back down. So here's my theory on this one. We could stay above the open of the day tick price. Okay, target these highs. If we make a double top here, we could probably come back down to the EMA, but not take out this low. Then we would go up again, maybe small pullback bull trend, finally make a new high. But sometime around is, I don't know, maybe like is bar 60, we could start to sell today and then close this gap, or try to close the gap at least. Okay, if we fail to close this gap and maybe come in here and the market could bounce, expect that gap to stay open. We could go and try to get back to the EMA, so it would be more like this. Let me see. We could just bounce and then come back down. And then just go, maybe small pullback bull trend. Could last maybe like hour, 2 hours. Go, and then finally, we just start to sell. All the way to here, maybe with 3 legs, but not close the gap. And then at the end of the day, just bounce. And then the EMA would be like this. Something like that. And then like that. Actually, sorry. So like this, okay. Stop there. And we could actually close below the EMA. So that could be us today. So this would make some kind of a wedge top with a trap, and then start to get a sell the close market at the end of the day. We bar 20 tested and immediately found buyers. So I think the market is trying to get to the bar 15 high. It wants to test the bar 15 high. We may not take out that high. All right, so we now have a new inside bar. Since the bears reached the first breakout target, bar 8 is no longer valid since we have a new one, which is 21, followed by an inside bar 22. So you should measure bar 21 range and look for a breakout confirmation. The next idea, what the market can do, is actually take out this 15 high, make a new high, then come back with 2 legs, okay? So as EMA goes like this, so we go up, make a new high, come back with 2 legs, and then get a really nice buy signal bar, bounce again and make a slightly new high, and then, or lower high. If we don't make a new high, then look for a lower high, come back to the EMA, and then I would look for another. Okay, so the EMA goes like this, and then at the end of the day, we sell into the EMA and we close below the EMA, something like that. Okay, bear C head and shoulders pattern, but left shoulder had right shoulder, but I think we're going to go test that. I wouldn't sell this. It's still always in long. So I bought into that trap, and I'm looking for market to get to 15 high possibly. I don't know if they're going to be able to make it, but they might be able to. But first I want to see bulls actually take out the 21 high. We need a good bull close here. And that would be high 1, high 2. Or if you're counting here, this is high 1, high 2, and high 3. Or from this low, right? The first test high above 20, and the second entry long above inside bar 22. It came down and tested 22 low, so it trapped the bears selling, and that's a 20 bar gapping. The first touch, there are always buyers waiting at the EMA. But now bulls need to close a bull bar. If they manage to close a bull bar, then we're going to go back up here. Bears want a surprise bear bar closing below the EMA, taking out the open of the day tick price. As long as we're above it, we're bullish. So you have yet another triangle. So if you have a bull flag, you have a triangle, and bears want that surprise bear bar coming down and testing the bar one low, but I don't think that's going to happen. I'll think about it when bears actually show me always in short condition setup. But the bull's also not doing all that great either. So it should have been bull bars and bull bars and bull bars. So can the bears actually get their chance to sell here? Is move underneath the EMA, test the open of the day, tick price, and turn this into a trading range? They might be able to, but we need the imbalance bars, meaning gap bars underneath the EMA, closing strongly below the EMA. Bears getting a breakout, but they have to close the body bearish to continue to sell. Their next target will be 79.25, perhaps even 77.75, only if they close a bear bar here. If they fail to close a bear bar, then the breakout will be managed, and then these bulls will come in and trap these bears and then go and test the bar 21 high. So you should always be prone to possible traps when you see an outside-inside bar, because they both above the 22 is already, and no one's going to put the stop underneath the inside bar, right? It already came out and ran it. So it's probably way below bar 20, the stop. But if bears close this body below 21 low with a bear close, then bears will sell this and try to take out the bar 20 low and try to take out some of those stops that the bulls already bought above 22 and put the stops down here. But if the bulls can contain the bears, meaning no bear body closing below 21 low, then we're going to go and test the 21 high. So it's very important what the market does, and you need to be able to see it. And that comes with experience. That comes with pointing out, like, look at this. That's an inside, outside. It failed to be inside. But then you have 21 outside and then 22 inside. So you have to expect traps. Anybody who bought above 20, remember, they got stuck. What do you think they're doing? They're allowing bears to break even. That's going to be somewhere here, or possible test of 19. Bears are trying to get to the 19 close, right? This is their second time. If they fail now, then the bulls will take over. Bulls know that, so they're looking for bears to get out of the way and fail and finally make a decision. Okay, we force their hand and we prevented for bear body to close below the outside bar 21 low. And we prevented bears to take out the 19 close with a bear body. Then those bears will exit and the bulls will swarm into market. But if the bears take out the 19 low, 21 low with a bear body, no bull will buy. So this bar, how it closes, is very important. This is the second sell at the EMA. If it fails, bulls will take over. Double bottom possibly at the EMA is a good sign for bulls, if we get it. So it's still always in long. No bear gap bars below the EMA closing. But there's also no bull bar yet. Bar 24 is not a good buy signal bar. It's a good looking, by shape it's a good looking. It's a weak bear bar, but it is not a bull bar. So there's hesitation here. So by bulls, they need a good signal bar. But they see bar 24 as a sign that bears might be giving up here. So they close a good bull bar here, they're going to try to go and test the 21 high, maybe slightly higher. So decision hasn't been made yet, but slightly turning towards bulls, I want to say, due to the body closing on its high with bar 24, but still it's not bull bar. So that's where the hesitation is, because bulls know that the bears are trying so hard to bring it down to the 19 close. But if they give up now, meaning they actually smoke out these bears, then we're going to get to the 21 high, a little bit higher, possibly 15 high. But you're in a trading range. Also some kind of a triangle. Bear's still trying to push this to 19 close. They're trying to get a bear body close so they can sell further down. And if they get that, we could break out to the downside. We could come all the way down towards 51.75, 51.72, 71.50. So that area somewhere here we could come in and then bounce. But why is it taking so long? Still no bear close below bar 21 low. So that means no breakout. See? Underneath 23, bears trapped. 24, I said it's kind of a signal. And then 25 is a higher low. So now we go and test probably 21 high. All right. So I bought one tick above 25. And I'm looking for market to make a decision here and do better by going and testing this 21 high and higher. First scalp target for bulls will be around 86, 51.86, 51.86.25. Acceleration could bring us to bar 15 high. I will be scalping both places. But first is, we're still stuck inside the outside bar 21. So there's always bears waiting at the high, wanting to trap the bulls. And if you actually measure the entire range of bar 21, if you if you are using my template, that upper third is where the limit seller is waiting, only to fix. Right? So they're trapped here, they sell higher, they fix. But this bar closes bullish, is above the midpoint of outside bar 21 range, then we're going to go higher. So it's a sideways market at the moment. What bulls want here is small pullback bull trend of some sort, like a bullish move. But they haven't started anything, so it's kind of a bull flag, is above the EMA, but it's not working out the way I wanted to. So anybody who bought above bar 25, one tick above, entered around 83.25. Since ATR is only 2.5, they have a 1-point scalp. So 83.25, 84.50 was their scalp, which was my scalp. That was a 1-point scalp. And I was holding way above, market to go way above bar 21 high, test the 86.25, possibly 87.50. I'm not getting it. So market just gave me a 1 point and now upsetting me. But there was a 1 point there. So now everyone's trying to make a decision here. Do we stay in this mess? Do we allow bulls to try one more time and close a bull bar? Because everybody who bought above 25 is disappointed. All they got is a 1 point. Maybe some didn't even actually scalped the 1 point. Nowadays, nobody goes for 1 point. Everybody goes for a minimum 2 points. So they will be buying is somewhere near the EMA, wanting to close this bar bullish. If the bull's able to close a strong bull bar here, then the next bar will be bullish, the next bar will be bullish, and we'll go and test the 15 high. So you can't just exit out of something thinking that this has just failed. It hasn't. Nothing is taking out the signal bar 25. Bar 25 is a phenomenal signal bar. It's small, it's mighty. To me, it's a perfect setup to go long one tick above. So I did. Disappointed. What did I do? I bought somewhere near at the EMA, fixed that trade. I had a 1 point scalp there. That was a 5 tick above 25. I got it, but my runner is failed. So I bought again. So now I fixed that runner. Now I'm hoping that the bulls will not disappoint me and will close this bar bullish enough to get to the 21 high where I was trying to go. But not just the 21 high, higher than the 21 high, somewhere around 86, 86.25 was my actual target. So this is where I want market to go. I'm going to give bulls one more chance to fulfill my dreams. If they fail, then I will exit. Because if the second try the bulls are failing here, then I have no business being in this trade, right? Okay, 2 bull bars, good sign is I need a good follow through bull bar, taking out the upper wick of bar 26 with a bull close. Then my dreams are going to come true. I'm going to actually test the bar 21 high and possibly test of 51.86 and then acceleration into the bar 15 high, somewhere around 87.50. All right, here we go. I like to see bulls actually do something here. And in fact, next 2-3 bars could be bullish as we go and test bar 15 high. But be prepared, we may not actually make a new high. We may not get above the 15 high. So what will happen? Anybody who sold will sell higher, and they're going to try to bring market down back to the EMA, possibly even test underneath the EMA. But there will be bulls waiting once again underneath the EMA wanting to buy. And this time we're probably going to take out the bar 15 high and make a new high. But I need another bull bar here. 3 is better than 2. But if this is failing, we could suddenly get a surprise bear bar. I'd be upset. But getting the 3rd bull bar, small pullback bull trend, I don't know. We might actually go 6-7 bars in the same direction, somewhere up here, and then come back down. But what if we have a double top and a neckline, bear flag right here? It's possible, but there's no gap here. There's no gap body to say that this is bearish, okay? So yes, there's a trend line here, okay? But there's no bear gap body here to say that there's a bear pressure here. There's nothing. There was a structural breakdown, but higher lows. So I'm going to look to see if this bar can close bullish. If they manage to do so, then I'm going to let bulls to bring price up to 15 high. I'm going to open the question box for the last 15 minutes of the live webinar. Question box is open on GoToWebinar. You can post your questions there. I'm in a trade, so if you can keep the questions short so then I can manage my trade at the same time. I'm still long. That is the 3rd bull bar. Great job. I think everybody's trading, so nobody wants to bother asking questions. Like, we can't be wasting time with this. Time is money. We're doing great here. We finally got a good run. It's like, no one's asking questions. What is wrong with you people? Oh, here we go. There's a question. I'm new here. Is how could you use ATR to target? ATR is what we call average true range. Okay, I think that's what it's called. So basically it calculates the bars and looks back. So you can change the period, which is how many bars you want this indicator to look back to calculate the average move up or down, like how much the market can go up. I'm calculating time and bars, right? Time and price, 4 bars, so that's 20 minutes. So I'm basically looking back 4 bars, and I'm trying to decide how much the market can move. So that's average 2 point and maybe quarter or 2 points, since it's not, okay, so it's 337. So roll it down to 227. So the market can go 1 time the ATR, 2 points and a quarter up or down. Since it's closing bull bars, you should be buying and scalping about 2 points and getting out of the way or leaving a runner. So that's how I would use it. Yeah, so basically we're breaking out now. So my target is, I'm measuring from here. You can measure so many different ways. I look for conservative targets, so I'm going to stick to what I know. Right, so 21 is an outside bar, followed by an inside bar. This is your shallow target. Now, it's a shallow target, it's a good scalp. That's the initial scalp, but we can accelerate above it. Once we accelerate, that will be target. So this is where I want to take profit, 87.50, but market could go higher. The risk-reward traders, they already bought above bar 20. They had to endure this flag pullback, up on this, down this, up on this, down this, up on this. So that's the wedge bull flag. They're going to measure 1 time. That's their target, but I'm not sure if we're going to get there. So right now we're scalping. It would be nice if we can get there, but you should definitely see. I've scalped. I said I'm going to stay true to myself. I said somewhere around 86. I will scalp because the target was 86.25. 86.25 is, hold on, I didn't really measure that right, but 86 was what I was going for. 86.25 was target, so I scalped to 86. It went above it, but I want more from the bulls, so I want them to actually bring market up to 87.50 area. But I did say we're going to test about 21, bar 21, so we're doing that. I just want more from bulls. They're taking profit here because it's kind of a top of this trading range, but what you're getting here right now is what I call a distribution. In order for it to fail and bears market to distribute further down, they need to close bear bars right now. Then you can sell. But right now, distribution can be to the upside. This was manipulation, hence it was the expanding triangle. So now some kind of a distribution started, or we're still in the manipulation, which is sideways market, right? That means it's trading range. So when you buy something from the low of a trading range, remember what happens. Why do they call it manipulation? Because in the trading range, you get manipulated. You buy here, you take profit here. Manipulation happens in the middle of the range. And then if you take profit and it continues up, manipulation happens at the top of the range. Okay, so I don't know if we're distributing just yet. We haven't broken out of anything. Distribution is generally the breakout phase, so we're not getting that yet. So we're stuck in this trading range. Bulls are still closing bull bars. Remember I said we could get another 5-6 bars to upside, so that's 2-hour bar is 1 hour and a 6 bar is 30 minutes. We got 1, 2, 3, 4. with the 5th bar, I like to see the 6th bar actually testing somewhere here before coming down. So it is a leg in a trading range, but I think market wants to go higher. So I took profit here. My stop is somewhere down here. If I get a bull close, I'm going to put the stop underneath 27. I'm going to move it, and I'm going to look for market to get back up here and possibly even there. 1R for bulls is from the bull bar is measured right there. Or you can also measure, go conservative. You could put your stop here. Your entry above 25, we reached 1R. Now 2R for bulls would be right up there. And that's another reason why we're pulling back, because the bulls got a 1R there. And you're in a trading range, so you're not going to get breakouts in a trading range. You're going to get legs in a trading range. So they're taking profit. So I said you can measure it so many different ways. It just does the same thing anyway. So whatever you're measuring is going to give you the idea why that profit taking happened here. So I like to see these highs tested again before. But remember, I gave you guys two options. We can actually take this high and make a new high, and then come back down and make a new high, and then come back down, and then go again. Towards the end of the day, we get a sell to close. You know, a couple of legs, strong legs down to the EMA and under the EMA, and we could close under the EMA. So the first option is go and test the bar 15 highs and then move down to the EMA. Now we're kind of testing the bar 15 highs. Maybe we are moving down the EMA right now, and expect then market to move underneath the EMA and then trap the bears again, and the bulls show up. And this time we actually take out the 15 high and make a new high. So they either go now and test the 15 high, or we start to get bear bars and move underneath the EMA. I would not be too quick to sell underneath the EMA, because that's where the bulls are going to trap the bears once again. But so far so good. I have not exited my long. I'm still holding. And market is bullish, and here's the question. Can you say more about how when the EMA is above the last breakout point in a bull trend, it strengthens the bull case. When the EMA is below the last breakout point in a bull trend, it strengthens the bear case. Well, you kind of answer your own question, right? So you just repeated what I said earlier, which is a good thing. That means you were paying attention. So look, we have a gap up and bull bars, leg 1, leg 2, leg 3, wedge. Market comes down but cannot take out that breakout. And EMA is kind of above that, right? So we are doing good. So this is bullish. So you should be looking to buy. You should be looking for good signals. Since we're going sideways near the EMA, it's a higher probability to enter near the EMA with long positions. Since we trapped the bears twice, and then bears finally exited with bar 24, is trapped higher low 25, reversal. So we should be testing the highs. Breaking out from the high is a whole different story. So what do? You say that this is a trading range, so I'm going to take profit at the highs, thinking that the market could fail there. So you can go to line chart. Somebody asked a question over the weekend in one of the study groups, is Albert's study groups, the original one. BTC has its own study group now, but one of the study groups that I'm part of is there's a guy named Emil Usinov. He created one, maintained it for a long time. You probably know him. So in his group, somebody actually asked, and I answered, how do you know market has a good strength? So this question just come up here, is very much in line with that question. You can find it on the Facebook group. So basically you look for gaps. Look at this gap right here. That was the last breakout point, right? So the market is very bullish, right? So look, if EMA manages to get above that, right, expect a pullback, but expect to buy that pullback. So first you want to see price get above that high and drag the EMA with it, As it goes up, expect a pullback, and I would buy that again. However, if the price makes a new high, but EMA does not, okay, so then we could actually pull back towards the EMA, move underneath, but disappointed bulls will be waiting there to buy again to make a new high. So, and then you could see that the EMA moves higher, then you know you are still in a bull trend. But right now, we're bullish trend. What happens after a trend? We go sideways. So it's the trading range phase. I don't use indicators. The only indicator I use is pretty much is this. And on the 15-minute, I use this D value, which is a free indicator. I posted on my server, but I can post it here. So this is the only one I really pay attention, which is the ATR. Otherwise, I don't really use any other indicators other than the moving averages. You can download, if you're an NinjaTrader user, this is called D value area. You can find it on NinjaTraderEcosystem.com. There's no point of using it on a 5-minute chart. Even 15-minute is an overkill, but I just want to show where the strong is buying and selling is. Like here, something happened here, right? So sellers are not that strong, so it's a good area to buy and bounce. If we move underneath with bear bars, then this is the area we're going to come down to. Might even pull eventually in this area, but I don't know if that's going to be today. Market is making way up towards 15, but not very strong. If this area holds and we close a bull bar, I'm going to expect market to test 87.50. Well, that's kind of disappointing, isn't it? I mean, look, we're right back to the 21 mid-range, but if the bears actually now break that and come down to the trend line, probably somewhere under the trend line, buyers waiting. But that's disappointing. So we had 1, 2, 3, 4, 5, 6 bars. Okay, so we did have 6 bars, but we failed. Now, just because they're selling, that doesn't mean that we're going to sell. Now, bears see a double top, lower high neckline. They want to test a 20 low. So they want to close below the EMA, but probably buyers waiting there. Even if we move underneath the EMA, it is possible that the buyers will try to block the bears there, and then they will buy, and a small pullback bull trend can start and last actually an hour or so. Okay, but what if we get an imbalance bar, meaning a gap bar underneath the EMA, and then close another bear bar? Then we become always in short. We are not always in short. We are still always in long. So here's the trend line. Here's the trend line. Bulls are disappointed, but I did say we could get a 6-bar move up, but I'm worried that we may not get above the bar 15 high. So if this bar closes bearish, I will exit, and then I will look for bulls again underneath the EMA. I'm going to look for bears to try to detach from the EMA, but then get trapped once again under the EMA. The question is, let's see. There are several questions I actually skipped. Sorry, guys. Let me answer. Thank you, MD. On 15-minute, is it a buy to close? Well, pre-market it was a small pullback bull trend, got a breakout, but it really is not at the moment. It's going into a sideways price action. because it was a trend for several legs, in fact. Leg 1, pullback is leg 2, pullback, leg 3. So it's just, we're stuck. And bears see a wedge top and a double top lower high major trend reversal. They see a neckline double top. They want to test the Globex high, possibly. So if the market somehow turns into always in short, meaning two bear bars closing on their lows below the EMA and then separating, I might actually sell the first pullback to EMA, but I'm not interested right now. It's still always in long. Why did you like bar 25 as buy signal? Well, look at what's happening there. I'm going to get rid of this. Okay, so get rid of everything. Take a look at the price action. All right, so you had bears sold and trapped. Okay, so what do you think they're going to do? Because they see a outside up bar, they know that they are in trouble. Market probably wants to go up high and test these highs again. But they have to fix it. They have to fix and exit out. So they're probably going to sell above that bar again. Or if they see, since this is going sideways, two strong bars, one down, one up, that's the trading range. They showed you that they're actually selling. And I said, wait for them to bring into some average price and see if they're going to be exiting. Or are they going to come down and test the bar 19 close? If the bears come down and test the bar 19 close, they can actually get a breakout and move underneath the open of the day tick price. They failed there for the second time. Why? Is because bulls bought here. Now they want to buy into break-even event and trap the bears for the second time, right? This is a failed breakout at the EMA. This is another failed breakout at the EMA. So this is a failed low too, nothing even closing. So now you get a bull bar. So this is the second trap. First trap, second trap, and a bull bar closing like that. It's an inside bar, is also bar 25, and a good buy signal from the EMA. You can enter above, put your stop here, and that was a 1R, I think. Yep, so they got a 1R. You can even just go one tick above, 83.25. They got a perfect 1R if you enter one tick above 25. So because it's the trading range highs, I said, we're going to test these 15 high, but I had two targets. I already scalped one target, and my runner didn't really run. Two legs down. I'm worried about bears moving price down underneath the EMA. If bar 32 closes below the EMA, I'm not going to be all that excited about selling anything. As far as I'm concerned, we could close a bear bar here, get another bear bar, separate. Everybody else will sell it, but look what you're selling into. You're selling into a support. And you sell this, there will be buyers buying. I will enter and go along there. The measured move is basically this. So let's see. See, I'm measuring maybe here. We didn't really get the measured move, did we? I can also measure from here. So that was the measured move, right? So here, high, stop, that. You just have to, I don't use any of this. So it's basically, you edit here. So you put a 0, 50, 100, 150, 200, 300, 400, so on. Okay, so basically this is 0, 50, 100, 150, just to see if it's going. That's 200, that's measured move. That's 300, okay. That's it, that's 2R. You don't really need any of this. Oh, look, we haven't even moved underneath the EMA. The next question is, I think it is a question. Hi Rose, I bought the 50% pullback over bar 20, thinking the bears were going to exit break even. Then I was disappointed bar 22, closed as a bad high 2, and exited small profit. Was it wise to exit, or was I being too scared? So you basically bought the 50% pullback, thinking that this is going to go well. But look, 1, 2, 3, 4, 5 bear bars versus 1 bar, and didn't get a follow through. Why it did not get a follow through? There's something happening there that market is preventing that follow through. And therefore, bears are disappointed, right? So they were selling here. They were looking to test the open of the day, move underneath, turn the day into a bear day, go test the bar 1 lows, maybe get a breakout, continue to sell and close this gap. That was their goal, but they got trapped. So if you think that you can buy here, your thinking was right. Market is probably going to come down here. It's going to give them a break even, but that's only the 80% equation, right? Probability, not equation, the probability of bears getting a break even. But there's then, if they cannot close bull bars, strong bull bars, market could come down to here. You also have to allow them to get a better price. Look, that was a 1 tick gap right there. So the bears failed. Then you look for a second entry long, right? So, but this was the first entry, really bad. You don't buy that. They're probably going to fade it. That's your new high. So I'm counting like this. First time the market went above a bar, but closed the bear bar. No one's going to buy that. So second entry is this, but you're going against 1, 2, 3, 4, 5. That's a leg in a trading range. So you don't know. It's going to go quickly up there, right? So stuck bears will sell, come back down. So now that was this is the actual high 1 in my opinion. And that's the actual high 2, but the problem here, we did not go below that. Now we go below that and get back above. Okay, so that's high 2. But the problem here is bears have not yet, made decent money. So, but you don't know. They may not actually come down to the 19. So if you bought here, that's fine. Where's your stop? Where do you put your stop? You put it right here? Okay, so you put it there. So you're looking for bulls to at least get back to these highs, right? Because there are bulls also trapped there. Look at bar 21, went above 20. So you know eventually market will get there. So you kind of made money there, but you exited too early. So where did you exit? Then I was disappointed by bar 22, close as a bad high 2. So, okay. Well, it is a high 2. It came back and tested the low and then closed semi-high above its midpoint. So that's still bullish enough. But the problem here is that bears have not finished their objective. Their objective is to get there. So you have to give them space to move down. They move down. Your stop, you didn't have to exit. Your stop is somewhere here. Okay, or maybe down here. I don't know. I would not put it down there. So if your stop is here and you're exiting early, that's just because you're scared. Now, what do? Just wait. Wait for market to show you how strong the bears are. There's a 1 tick gap there that the bulls maintain. So the bears are not all that strong. And the bar 26, everybody's exiting above. So you buy. You can even buy. You could have made more money there. It's difficult. It's not easy this day. But I have seen this day have 2 options like this. Okay, sometimes 3. There's the bearish option, right? That's wedge, double top, major trend reversal. Bears are trying to take out the 19 close and eventually take out this. Move underneath to open of the day tick price, come down and test the bar 1, gap down, but as everybody else sells it, then the bulls will buy again. That puts us in a trading range. That's the 3rd, but the bearish option. But we're bullish. We have not yet closed below EMA. I have no reason to think that this is going to sell strongly. Even if we move underneath the EMA, there will be buyers waiting down here. because it's a trading range. Will you please explain using low 1, low 2, and the opposite high 1, high 2 trade? I'm sort of confused. Yeah, it can be confusing. You just have to take a side, okay, or pick a side, I should say. So I make a decision depending on what the market is doing. Market, if you look back, okay, on Friday was bullish, right? So it was bullish, trapped the bears underneath the EMA, wedge bottom, and we actually gapped up above it. So we could have a measured move to the upside, but problem here is that breakouts are not all that strong. The follow through is really bad. We ended up making a wedge top. This is a gap up, but I'm looking to buy, not looking to sell, right? So I have to look at high 1s and high 2s. Well, here's the first time we went above. Here's the second time we went above. Bad follow through. Maybe I should not buy anymore. But what about the bears? This is the first time after making a new high, market came down, but this is a terrible low one, right? Even though it moved under, but not with a body. So no one's going to sell. In fact, there will be buyers waiting to fade that. So where's the second sell? This is possibly the second sell, but again, not with a body, with a wick, you can't really sell. And it's not a good sell signal. It's smack in the middle of it. I'm not going to sell anything there. I'm looking for a good sell signal from the highs. Oh, that's it, bar 15. So if you're going to sell, you sell underneath bar 15 and expect a couple of legs down. And that's it. That's the couple of legs down. That's what I would do. But if you're bullish and you don't want to actually sell, then you're looking for high 1s and high 2s. High 1, high 2 is high 3, high 4, right? That's it. Then we start to come down. We took that one out. So now I'm looking to see market didn't make a new low, but it took that higher low out. So what am I looking for? If I want to buy with stop orders, right? This is my reset. That's my high 1. That's my high 2. That's my high 3. We didn't take that out, so then I can count. We didn't go above it. We might make a high 4 eventually. So what the bulls are doing, trailing a buy stop order above these bars to get in. So the last order to buy is above bar 33. They're looking for a bar to close above 33 or activate them. Problem here is that you'll be buying against 3 bear bar micro channel. I'm not, we might actually go up, but I don't know. So, but that's how you get in. You put a buy order right there, you wait to get activated. You grab a 1 point, you leave a runner for the prior high. And for bears, this isn't a new low, but it's a low from there or here. So if you want to sell, it's not a good place to sell, is it? Right? So there are no good signal bars. It's not high enough to sell. If I'm going to sell, I'm going to sell at the highs. So, okay, so here we go. We took that higher low, lower high. So maybe I can now look for sell signal bars. This is the first entry. I'm probably not going to sell it. I'm looking for a second, this one. It's kind of close to the EMA, but it's a really good. So how do I sell? Well, here's what you do. If you're looking to sell, right, I'm not going to sell underneath bar 28. It's not a good sell signal bar. Here is 29. That's the first entry short. They did sell anyway, but I know there will be buyers waiting to fade that, so I'm expecting a pullback up. Then I start the trail underneath 29 or 30. Bar 31 enters me into the short trades. Somewhere around EMA, you take profit and you leave a runner, okay? But it's not guaranteed that your runner is going to run because you're selling into the trading range lows. So you're in a scalp mode. You have to take profit somewhere at the low of the trading range. You just have to pick a side. How do you want to handle this, right? Market is bullish. I'd rather to look to buy. if I'm going to enter with stop orders. If I'm going to enter with limit orders, then EMA, I'm going to have to wait for EMA tests and then buy. And then scalp a little bit and see if I can leave a runner into the prior highs. So it's just about trailing buy orders and sell orders and entering with that above and below the bars. Bar 33 closes below EMA. Bar 34 is trying to get a follow through. It's a double top lower high. Major trend reversal is what the bears are trying to get. It's also neckline 19 and 20 low. So the bears are trying to take out those. We are gapping down finally. My problem with this is that bulls are looking to trap these bears selling right now. Now, how do I sell? Here's what I want, okay? Every time I see a double top neckline, if that neckline is taken out with a bear body, if the bears actually close a bear body like this, I don't just sell it. I look for a pullback into some gap area, and then I sell, okay? And then I sell with a couple of legs down. Otherwise, you sell right now, they're going to trap you. You should have sold with somewhere up here. I exited with bar 30. Remember I said I was still long, but I'm not happy. I'm going to exit with bar 31. I exited with bar 31. Could you have sold 33? Yeah, but you don't have too much space because there are buyers waiting in this area. So look, it actually, right, market, that opened here, went up, came back down, and closed there. You could sell, but again, you have to take profit. All right, now we separated. Okay, this is good for bears now. So what do you think is happening? Well, we have a trend reversal, but market is now forming a bigger trading range. So did we get that bear body? We might very well get that, so that's good for the bears. But what do I do then? I'm going to look for a pullback to the EMA, and then I'm going to try to sell. So if I weren't talking, if I were to trade this, I started answering questions. So I exited with 31. I did warn you guys. I'm not very happy. What I'm looking for is market to come down. One of the variations was to trap the bears right here and get back above the EMA and go up. That's not happening. So that's a dud. Now, bears now with 33 and 34 increase the probabilities of getting a breakout, taking out the neckline, testing the open of the day, maybe even moving underneath bar 1 by closing 2 strong bear bars. We are now always in short, but in a trading range. So what do? You just take profit. If the bar closes 35, closes below the open of the day tick price, market becomes a lot more bearish, then we will probably going to come down somewhere here and test. There's a breakout test on the Globex, so we're probably going to test that, but we could easily bounce from there. So anybody waited for bar 33, right? Their stop is somewhere up here. They took some profit probably at the neckline and trailing their stop. So they're probably holding a runner. But those of you that didn't sell, what do? Well, you wait to see a confirmation that the bears are strong, right? That means a bear close, something like this. Then you look for a pullback, and you look for some kind of a double top, some kind of a sell. That's the one that I want to sell. Because if I sell right now, they could trap me as these bears are taking profit. So double top after big gap up, right? And then neckline they take out, comes down to the bar 1 lows, right? And then goes right back up. So that creates that trading range. But you see what just happened there? I said I probably would take profit, not sell, because I like to see maybe a pullback and then I can sell that. And the problem here is that these bears did take out the neckline, but not with a body, with a wick. So they either have to show me now 36 as a bear body filling the lower wick of 35 with a bear body, then that's fine. But if it fails, we could go right back to the EMA. So we're not getting this. You see that? Look right here. That's the neckline, right? So that's the bear flag. They got another strong leg. So that's a bear flag. That's a bear flag. And then finally reverse back up. But look, I said I would not sell here. It's too late. I would look for a pullback first. Like this. Think of it. Don't worry about this part, but look. You're getting two legs down, right? It goes back up, comes back down, takes that out, but fails, right? So look, this neckline right there is not taken out with a bare body. So it pulls back and then comes back down and finishes the job, or tries to finish the job. And it does eventually, that bare body, and it moves up. So now bears are looking to swing, right? And they actually did close some kind of a gap there, and the market goes back up again. But this right here is not good for the bears. So now, as it gotten EMA closer, that whole area is there's a sell order there above the EMA, at the EMA, underneath the EMA. One of or two of those will get activated. And as it sells, bears start to make money. But I like to wait for a bar to close. But if you're looking to sell with limit orders, you leave like a couple of orders around the EMA. Whichever gets filled, you're in, you scalp, you leave a runner. And if the runner doesn't run, okay, that means it's going to go up and probably try to make a double top with one of those bear bars highs that has an upper wick that is prominent, such as bar 34. What about bulls actually is doing this right here, right now? Trapping can they actually trap? Yeah, they could go up here. There'll be probably bears waiting there. Look, consecutive 1, 2, 3, 4, 5 bar consecutive selling here. Where are the bears waiting? Right there. This is what I call a strong sell zone. So it could go reach there, and then the sellers will probably going to show up there. Sellers will probably going to show up there. Bears want some kind of a double top, but bar is too strong. Probably we're not going to get a double top with bar 34 high. Probably this is going to try to get back up to here, okay? That's where the seller is waiting. But some of those sell orders, like I said, the first one got activated. There was a scalp. Then these are activated, so we're stalling here. Bulls want to break this area and get above so that they can get back up here. But that's the trap that I was talking about. That's the trap right here. So I think if you're going to want to sell anything, you want to see bear bars actually close below the EMA once again with a really strong bear bar. You have to kind of wait for that. Because if you don't wait for that, you sell now and the market could actually go all the way up here. You could lose a lot. So you have to kind of wait for 1 or 2 bars to go up and then the bears to show up. Because we took out the bar 34 wick, I'm looking for now bulls to push this up into this area. Maybe 1 or 2 more bars. It may not touch it. I don't know if it's going to touch it. You also get this. That's the trap. That is the trap right there. And the market starts to make bull flags, takes out that high, comes back and traps again, and the rest of the day is bullish. But I'm still going to look for sellers here to do this, right? So not that, sorry. That right here. Right? 1, 2, 2 legs down. So it's somewhere here, sellers waiting. If I see something like this and this bar, I'd be selling underneath that bar, looking for some of the gap to be closed. I don't know if we would get that, but we might. But right now I'm looking for bulls to reach here. So I actually bought it, and I'm going to scalp somewhere near that red box or underneath bar 30. That's it. So we're testing it. See how that worked? Why did we get such a strong bullishness? Well, look how many times the bears try to sell. I warned you about this trap. I was looking for a little bit less of this and not able to take that out. But, well, two things that the bulls actually did to prevent a breakdown, right? So I was really looking for a higher low, not this. But this is still not qualified to sell. This does not have a bear body closing down here, one tick below, to say that the first pullback is going to sell. Because the bears are weakened there, so the pullback is going to be deeper for bulls, right? Because everybody who bought above 20 still were hoping that we would get to the 15 high. We didn't. So they're going to buy lower, right? They already prevented. They're showing you the signs, subtle signs. How do I know this? I used to trade this on a 4,000 tick chart years ago, knowing that in another trade room, I was actually literally going with this. If this is a good breakout, that's great. Now I can sell, okay? But if it does this with a wick, then the pullback is going to be deep. I am not selling that. I'm actually buying, hoping that the prior high is to be tested again, right? So I bought it. I took profit already in that area. Now, what market does there? It's none of my concern. I'm just going to sit here and wait, because if they do sell, I want to sell and swing down. But if they take out this and demolish this area, then do this instead. Go up, come back down. I'm buying it. I'm going to look for a breakout above that high. But right now, because it's a trading range and bulls are stuck up here, okay, got stuck even more, they're looking for market to get back at least to that high. And they did. And I said, I'm going to take profit there. And I did. So it was a good scalp because I'm in a trading range. I don't have much room to go higher. As far as I'm concerned, it could just reverse right back down again. If the next bar goes back up, gives me a double top somehow, and then the following bar closes below the EMA, I'm going to sell that. But it hasn't set up. So as far as I'm concerned, bulls can actually target now the bar 29 high, bar 28 high, and demolish the sell zone. That's a boring day. But if you see, I didn't want to sell. I was too late selling this bar 33 or even up here. And I've done nothing here. But I'm looking to buy. And if the bar toward 35 cannot close a bear bar below the neckline, I'm going to buy. And I did buy. And I took the profit. Here's another, is reversal below the EMA, is strong bull bar. Really, here. Below the EMA is strong bull bar. Really, here. That's the 2R, so they're taking profit. But we close a bull bar above the 2R, 2 to 1. That's where the market is going to go, possibly even there. But I would say we might actually go there. But look for this bar to close above 2R. If it doesn't, then we're going to come back to the EMA. And that's all you're getting. So I took profit at that near the 2R. See, pull back to EMA is if we can keep contain the bears and trap them. We go back up again. Somehow, I don't know if did they break above it? Yeah, they did. But it comes back again, another trap. It's a mess. So it's a trading range. It's kind of like an expanding triangle kind of trading range. Okay, I am pretty much done with my exciting day. Very boring day. I think I'm gonna leave. Tomorrow is Al Brooks and I think it's Brad Wolf. No, I'm sorry. What is today? Oh, tomorrow is the 7th. So it's Tim Fairweather in the morning, Al Brooks late morning, 11:30 to 1:30 is Al Brooks, 9 to 11:30 Tim Fairweather, and then the Brad Wolf will take over around 1:30 to 4. So it's a triple star-studded day tomorrow. So don't miss it. It'll be a good day tomorrow. I come back on the 8th and the 9th. And then Tim Stout comes in on the 10th, Friday. It's with Brad Wolf. Yeah, so I'll see you guys on Wednesday. If we take out that 2R, again, I see something like this. I'm going to only take from the low to the bull body. That's it, right? And I'm going to look for profit taken at the 2R. If we close a bull bar, then you can hold it into 3R. If market continues to close bull bars, then 4R and so and so. But it is a leg in a trading range, nonetheless. So what about bulls? Could this be a spike, pullback, channel up? So then we would test that channel high. We would go there, we would come back down to EMA, we would go again, until at the end of the day, a sell-off. Okay. Have a great day, everybody. Remember, this is still a trading range, and this is a leg in a trading range. We might make a new high, but then you look for a pullback. Thanks, Roger. Thank you, everyone. Have a great day.